Good morning, everyone. You are able to see the screen and hear me? Please confirm it. And please confirm you are able to see the screen and hear me. Hello. Anyone, please confirm it.
Yes, we can see the screen.
Yeah, thanks. Okay.
Yes, I'm Miro from Ahmedabad.
So let's start with the session. The first session we'll be doing is a review of the markets. Before that, a disclaimer. This stock market information is for educational purpose only. We are not a SEBI registered advisor. Please consult your financial advisor before taking any decisions on buying and selling of stocks or any investment decisions. We are not liable for any gains or losses made by you. The objective of this course is to spread financial literacy. So this is the market scenario. So on 27th, this was the scenario. The market was on the Bollinger Band, on the mean of the Bollinger Band. And today it is, if you see today's scenario, it has started moving upwards. Now you can see there are some demand zones marked and some supply zones marked. This demand zone and supply zones were marked much earlier, and the market is ranging between these levels. The current level, if you want to see on the live chart, this is the live chart on trading view. I'm not able to remove this bar. It is coming in the way. Let's see. Now, if you see on the live chart on the trading view, this is the demand zone. So first thing, the market, if it is coming down, it will have to come down to this level. Okay. And cross this demand zone levels. So current demand zone level is at 16,000, 30, 40, 60 levels. And the lower level of this is around 15,684 levels. If it has to cross up in the upward direction, it has to pass this resistance. This is the support level, this is the resistance level. So it is on the upper band of the Bollinger curve. So after a long time, it has moved on the upper band. Okay, you can see in 4th April, it was up. And now once again, it is moving up. But the overall levels of the market is much lower than what we have seen earlier. From the roundup point of view, the market is slightly moving upwards, but on Friday there was a fall. Market sentiments are positive. It has corrected around 16%, but this week it has regained some 230 points. Will the market fall or rise? This week we are going to have RBI announcement on the increase, as well as the Fed, US Fed. So market will possibly not do much if it is below 50 BPS, okay, about half an interest percent. But if it is going to be more than that, then markets will react negatively. So up to 30, 40, 50 BPS, the market has already discounted that. So more or less it will remain at the same level. Maybe a knee-jerk reaction can happen. But the main problem is when the markets are moving up, investors are not putting money inside, but they are actually removing money. Overall, the Indian markets have fallen by around 15-16%. This week was a upward movement of 1.5-2% in some of the stocks also. The US markets have fallen much more. May was one of the worst months in the recent years. Current GDP growth has been around 8.7%, but there is no correlation between a GDP growth and the market, even though the myth is that if the GDP will increase, the market will also increase. Market is currently sell on rise. It means that whenever the market will start moving upwards, people are there in the market. Like here you can see, as it moves up at this level, there is a resistance around 16,800 levels, and it starts moving downward. To break this resistance, lot of people, meaning big ones, FIIs and DIs, have to invest. The current trend is that FIIs are still continuously selling. Around 35-40,000 crores have been sold in this month itself. So this is a major problem which you are seeing. And because even though the DIs are buying, but they are not buying beyond the FIIs level. So net what is happening is the FIIs selling is still happening, and that is creating a problem for everyone. So let's see the market, how it is going to move further. The monsoon expected to be 103% of your long period average. So that's a good sign. So the rural demand will improve. Definitely FMCG and two-wheeler sectors may benefit if this happens. The Indian companies' results were much better, okay, as per the expectations. Some of them have done well. So around 1/3 of the companies have not done very well. They are nearly flattish, but that is possible because of the current scenario. Okay. So, but still they were not bad at all. Nifty has reached the high of 18,100 levels in April. After that, Nifty is far away from that. So it is going to take some time before the resistance barriers are. This month, in the month of May, it went up to 17,132 levels. Still the difference is about 1,000 levels, 1,000 points. In the last 5 months, only once in green Nifty, okay? That means the markets are closing. Only in March 22, it was positive by 4%. Otherwise, Feb, April, May, every time it was much negative. And one more fact which is there, the market cap is remaining constant. Around September 2021, the market cap was 260 lakh crores. May 2022, it has still remained 257 lakh crores. This indicates that there is not much positive about the markets currently. Okay. In spite of so many IPOs adding market caps in this last 5 months, and you must be seeing that the LIC one was the maximum one, still the overall market cap of the India incorporation has not increased. That's not a very positive sign. Another negative sign is the advance decline ratio in this month has decreased. Means more stocks were declined than advance. In April, it was 1.13. It should be above 1. In March, it was 1.06. But in the month of May, it was 0.84. 0.84 indicates that it was below 1. Below 1 means there were more decline compared to the advance. Selling was happening in mid caps and small caps. Relatively large caps were more stable. What are the points of triggering? Before that, I will just go through the global events and we'll see what are the how the global markets are behaving. So let's see the Dow Jones index. The Dow Jones index has started moving up. Okay, this is a day chart on trading view. It has started moving up, and that's a positive sign. Here also it is showing in the ADX and the RSI, it is showing positive, just above the 50% level in the RSI and above the 25%, near about there. So Dow Jones is showing a positive sign, but if you see in the last week, out of 5 days, it went down by 3 days. Okay. S&P, very similar to Dow Jones, very similar to Dow Jones. Nasdaq 100, okay, last 5 days you can see all the three are looking very similar patterns. Okay, the dollar index currency is come down, but it has started once again going up. If it starts going up and once again it reaches 105, 106 levels, things will become more costlier, inflation point of view also. FTSE index has started moving up. It is relatively more stable and it is on the positive side, moving towards the upper band. The German index is also on the upper side, but still in the last 5 days, if you see, around 3 days were red candles. The French is moving positive. Okay, the Japanese Nikkei is moving up positive. The Hang Seng index is moving up. It was much better than the others, only one red candle. The Shanghai Composite Index is moving positive. The Korean Kospi is moving positive. Okay, so most of the indexes were moving upwards, so there is a positive trend in the markets. Crude oil is moving upwards. That has become a problem for India. So it is moving from 103, 105. It went last week to 110, and this week onwards it is around 117, 118. It is expected to go up to 120 levels in the very near future. This will increase our inflation and our burden, okay, because our export bills will become costly. The Brent oil is more costlier than the crude oil. Normally it is 3 or 4 rupees difference. So this is 118. The UK Brent is 120. So around 3 rupees difference. The gold has started stabilizing. It is going around this region only continuously. The Bitcoins have come down. Okay, be very careful. This is one of the index, Bitcoin index. The INR USD is flat now, around 77. This is the range. It is there since a long time now. Let us see a Nifty in a depth. So this is my Nifty. So Nifty is telling me on the day chart that I am trying to move upwards, but there is a resistance at this level, around 16,500, 800 levels, and people have started selling. So if you see in the last 5 days, okay, in the last 5 days, there were 3 candles which were very small and red, and 2 candles which were green ones. So it indicates still that people are selling. As the market goes up, immediately a selling pressure is there on the markets. On the week chart also you can see, here you can see the market is trying to move up towards the median of the Bollinger Band. This is a 20 simple moving average median, and this is plus minus 2 standard deviations. Okay. So on the weekly chart, a positive trend is there, but this is the demand zone. It is touching the same demand zone which we saw, and it is touching this and it is moving upwards. Okay, so this has become the lower support levels currently. But if the market breaks, it can go down to this level, and there is a possibility that it can happen with some more bad news coming. The monthly charts are showing that there is a continuously in the last 5-7 months. If you see, the Nifty is on the same levels. The Nifty is on the same levels right from, if you see, this was the August move which was positive. then September 21, October, November, December, Jan, Feb, March, April, May, till May. And this is the current candle, which is very, very small candle of June, which is not even seen clearly. You can see here, this is the June candle. Here it is, June candle. So if you see in this particular period, we are seeing that there is a continuous movement in a parallel direction, just moving sideways, consolidating market. So it is going to be tough for the Nifty to move upwards. Okay. So don't expect any major positive upward trend. Don't expect that. So let us see the reversal triggers, how it can happen, how the reversal can happen. Ease of inflation. Inflation is increasing in India and European and world markets, US also. Is there going to be any pause on the interest rates? No way. Interest rates are going to be increased. Even this week, it is going to be up by 8, we'll come to know. Okay. So RBI is increasing, US Fed is increasing, the UK and European countries are increasing. Liquidity crunching is happening. Reduction in the balance sheet is happening. RBI is also increasing the CRR. It may increase further. May, I'm saying, I'm not very sure on the CRR front, but on the repo rate and all, it is going to change. So increase in interest rate and liquidity reduction will continue for a year or so further. Escalation in the war situation is still there. Ukraine is getting destroyed. Situation is going to become worse. 100 days are over. World economy is more in trouble as we move further. As the war keeps on going ahead, we will get affected definitely. The crude, commodity, everything is going to become costlier day by day. Okay. So this is what we are seeing. Crude oil prices are going up. We saw just now it was 118 per barrel and the Brent was 121. Commodities, metals have been brought down by government by imposing the duties on it. Because of these duties, the metal sector is into trouble. The current Nifty levels, it has this 16,584. So current levels are at 16,584. The upper level, okay, the resistance is at 16,824 levels and the support is at 16,038 levels. So the market will move in this range between 16,000 to 16,800 levels. So this is the range in which the market is going to move. Pullback rallies will happen, but on each of these pullback rallies, there will be sell on rise. So I believe you should have some cash on hand, say 20-30% of your portfolio if you want to re-enter the market at the lower levels. Market may come down. I'm saying may because there are some bad news which is yet to happen on the interest front, on the inflation going further up. So all these negative things will take the market down. So the range is this, but there will be a possibility that it can come down to 15,500 or 15,000 levels. For market to move up to the 16,800 levels and maybe beyond that 17,000, maybe we'll have to wait for at least 1 or 2 quarters, Okay. Now what is going to happen is your markets will keep on giving you opportunity in some of the sector rotations which are happening and the stock rotation is happening. So whenever you're getting some opportunity, keep booking profits so that you are in a positive, your portfolio is gaining. But what you should not reduce is your core portfolio stocks. Core portfolio stocks, whichever you have identified and they are doing well and they are positive, you can reduce the numbers partially, but not fully. Sector performance, let us see some of the graphs, okay? And then we'll see the, so this is the graph on the trend line. I don't know why this is not going away. Okay, I am unable to remove this bar. So you are seeing the week chart, 1 week chart on the Nifty. And in this 1 week, these are the ones. Nifty has moved up by 2.83%. And the red ones are the sectors and the indices which were negative. You can see these two were completely negative. Healthcare and pharma, minus 0.38 and minus 0.46. Energy was slightly positive, but below Nifty. That is why it is on the right, on this side, on the right hand side. So energy positive by 0.81, financial services 1.38, Nifty bank 1.41, FMCG was positive only by 1.71. The week before it was much better. So you can see there is a sector rotation which is happening on a continuous basis. Private banks were 2.21% up. PSU banks were much better performing this week. Infra was up by 2.9. Central PSEs were up by 3.27. Metals were up by 3.51. Okay. We are looking at a 1 week Nifty. Then PSU banks were up by 4.72%. Realty this week was up by 6.42%. IT positive and media positive. In a 1 month period, we can see, let's see, it will be a negative. The May month was bad. Auto and FMCG were up by 5.06 and 0.55%. Rest, if you see all this, Nifty was minus 2.58% in the 1 month period. Okay, so May was bad. Okay. The other was MNC sector. Private banks were bad, negative. Financial services, Nifty banks were bad. Oil and gas were further bad. Now all this below the blue, blue is the Nifty line. All this below the blue are the ones which have become more negative and negative. So you can see metal was the worst. Energy, healthcare, realty, pharma, infra, PSU bank in 1 month is bad. IT is bad. So you can see the month of May was practically bad, except for these two sectors, auto and little bit of FMCG. Okay. So that's not a good indicator currently. If we compare the 1 year period, the positive, it is Nifty is still positive by 6.75%. Okay, in the last 1 year. But if you see the last 6 months figure, you will find it is very much negative. Only these few sectors have become now positive in the last 6 months. That is CPSE, Central Public Sector Enterprises, Energy, Auto, Oil and Gas, FMCG. But if you see in this last week, the autos have started going down. And one of the reasons is we are finding it difficult to survive. Let us see some of the charts of the sectors. You can see here, this is the Bank Nifty. The Bank Nifty is moving parallel and slowly and steadily it is forming lower lows. The Nifty Mid Cap Index is down. It is red and going down. Mid and small 400 stocks index is going down. This is the India VIX. The VIX is in this particular band and currently it is at a level of 19.97 levels. Here it is. Okay, so the VIX is telling me that we are little negative. Okay, this is the day chart. Now VIX is nothing but the volatility index, and the volatility index and the markets have an inverse relationship. So as the volatility index comes down from 25, it has come down to 19. Inversely, we expect the Nifty to move in the upward direction. Normally, Nifty will move in the upward direction when you look with the volatility index. So you can see here, this is the yellow line, which is your Nifty currently at these levels, and volatility index is moving downwards, slightly moving upwards as the volatility index is. See, from here, it went down, the Nifty came up, and now it is parallel, and therefore the Nifty is also parallel. This is the public sector banks which have improved, but on Friday it was down. Private banks once again down on Friday. Nifty IT started moving upwards. Okay, but the problem with IT sector will be basically many European and the American companies, because of the inflation, may reduce their spending. So that can become a problem for the IT sector. It may happen. If it is not 100% sure, nobody can be sure about that. Metals are unfortunately gone down very severely because of the increase in the duties which the government has levied. Hopefully, if the government removes in 3 months' time or so, it is good. Otherwise, this sector will have a problem. But the overall, the balance sheets of these companies are extremely well. So not much of a problem from company point of view, but the price will go down. The media stocks are little bit up. Energy is doing better. It has started moving up. Oil and gas will do better. It has started moving up. FMCG is little down in last few days. You can see here, it has come down slightly. It went up and it has started coming down. Auto has started moving up, but the auto will be having the same fate with like the IT industry. The IT industry will be little better placed because they will have the benefit of the INR, rupee, USD dollar ka conversion rate that IT will benefit. But in the auto sector, we'll have a problem if the interest rate keeps on going up. The auto loans will get reduced and definitely the business will get affected. So that even though the sector has moved up, it is still far away from really doing excellently well. Pharma is going down. This month of May was very bad for the pharma. If you see the pharma index in the monthly index, it has gone down tremendously. It has gone down tremendously. Pharma has gone down very badly. Realty, even though on paper it is looking nice, but very soon you will realize that realty will keep on going down because the interest rates will increase and therefore the bookings will get into the business, the demand for the realty will become problematic. Infra capex expenditure will once again become a problem. The government and will find problems. They are already finding problems of investing. They have to, since they have reduced the excise duty on the oil, they will have a problem of recovering that much money for the budget point of view. So they are trying to find out ways of imposing some duties or something so that they can recover the loss in the crude, the excise duty of the petrol and the diesel which they have given. Commodities are actually becoming costlier and costlier. Okay, the commodities index is down, completely down, and it has just moved towards the median line, but it is more or less going to be further down. Consumption is actually getting affected, even though this was a summer season, but the companies manufacturing ACs and all, they have unfortunately not done so well. Consumer durables have also been affected, as I told you just now. So let's see the sector-wise performance. So sector-wise performance this week. Nifty 50 was up by 2.93%. Large caps, mid caps, and small caps were slightly positive. This week we are talking about. Auto four-wheelers, the commercial vehicles were much better performing compared to the two-wheelers. Slowly and steadily, the auto index is moving upwards, but the interest rates increase will actually dampen the sector performance. The consumer durables and the consumption sector was positive. Slowly, it will increase as the monsoon will increase. The demand for FMCG will also start increasing. IT sector was positive. IT sector may get affected if the customer spending gets reduced, the budgets of the customer spending reduces, then IT gets into trouble. Metal sector was positive slightly, but unless and until the excise duty ban is removed, this sector will not perform so well. This is a problem with the sector currently. Energy was positive. Oil and gas was positive. Realty is positive, but overall the realty sector will go down because unless and until there is a benefit which is coming from the lowering of interest rates. And this will not happen for at least another 2 or 3 quarters. And then you'll find some of the inflation levels coming down. Maybe there is some kind of a stability in the interest rate. Unless and until the interest rate is not increased much beyond 1%, then what will happen? The realty will be in trouble, because the loans will become costlier and costlier. Okay, so auto loans, realty loans. In fact, the capex itself will become problematic. The companies will not be able to get into easy money for investments, even though many of them have announced big capex project like Hindalco from Birla Group, even Ultrachem Cement has announced. But all this will get affected unless they have got good amount of internal resources. So bank loans kind of projects will be more into trouble. The bank and Nifty financial services performance this week was poor. Okay. Private banks were more negative, PSU banks were positive. FMCG will improve if the rural demand will increase, provided we have a good rainy season. The red sectors, telecom sector was down this week. Nifty pharma and healthcare was down. So this was the first session. If anyone wants me to go through any particular stock, I can go through that and give you a feedback on how the stock is performing. Any particular stock you want me to look at? Like this is Mindtree, it has started moving positive just now. Tanla Solutions is moving positive. Any particular sector you want me to look at?
Grasim industry.
Okay. See, the Grasim Industries have come down. It is a holding company for the Aditya Birla Group. Okay, it is a diversified nature company. It is having cement and other kind of holding of other companies also, like Aditya Birla, Fashion, Capital. All these are not part of the Grasim Industries. So it has come down drastically from 1450 levels to 1339 levels. So it looks bad currently. And I can see a support level over here. So there is a demand zone over here. So you can see it is already touching this level. So it can come down to a little bit more up to 1260 levels. But this is a, you can see this zone is a support for, it tried to came up here, it went up. So it is coming down at the same level. So from here, if it doesn't go down up to 1260 levels, it will take a U-turn. It is already on the lower band of the Bollinger. So there is a possibility it will move up. But if you see the RSI and the ADX, here is the RSI. See here, ADX, the blue line is moving up. So the strength is increasing. But what strength? You're looking at the red, the DI negative. The DI negative is telling me that the stock is becoming weaker and weaker. Okay. So the stock is going down basically. Similarly, ADX, it is just above the, it was above over here, above the 50 levels. Now RSI is started going down. and it is below the 50 levels. So the RSI is also telling me it is likely to go down. The ADX is also telling me it is likely to go down. So it can go down another this much points, say from 1340 to 1260 levels, another 50-60 points it can go down. Because if it is going down further, then it can go in a very bad way up to this levels. So the next demand zone is here, which is at 1250, 1260. So this is a level in which it can move downwards if it is actually going down. Okay. Any other stock you want me to?
Aarti Industries.
Yeah, 1 minute. The stock is actually in a downward trend. The ADX is also, the negative trend is slightly decreasing, but still it is negative. The RSI is way below the 50% level. So the stock is likely to go down further. So if we see, this is the day chart, very, very badly placed. The ADX, the DI negative, all are telling me that the stock is going to fall further. Okay. So with any negative news, this stock can go down further. Okay. The earnings must not have been very positive because I'm not seeing any major positive movement after the earnings also, because it is showing continuously red. So the stock is likely to fall further. Where it can take a support is somewhere here. Here it is already now touching the band. Even here you can see there are too many basing candles, which indicates that the support can be at these levels. So definitely the stock is weak. It will go down. So this level is something near 670 or something. It can go down, take a support over here, and then it may start moving up. But currently it is showing weakness unless there is some positive news. Finding this problem with the zoom band, which is not going only. It is not allowing me to do anything. Okay. I will show you the trend line ka performance of this stock and screener ka performance of RT Industries on the fundamentals. Here it is RT Industries. The current price is around 720 levels. The stock P is little high, but still it is not very, very high. The intrinsic value of the stock should be around 431. whereas it is currently showing 720. So it is actually 1.5 times more. The price to book value is also very high. It should be around 2 or 3. It is good enough. The ROC is good, return on capital employed, which is above 15, 17. It is 22.7. It is very good. 27.8 ROE is also very good. EPS is good. Industry P is 23 and this is at 20 levels. It is okay, not bad. If you see the cons, the tax rate which the company is paying is relatively low than what it is showing. So maybe some accounts, maybe some adjustments must have happened in the accounts. The promoter holding has decreased. That is not a good sign. The pledging has not happened, but the promoter holding has come down by 3%. If you see the growth of the sales point of view, the sales growth has increased. The profit growth has also increased. In the last 12 months also it is positive. But the stock price has come down by 15%. So some issues there with the company. One has to go through that, then you will come to know what is the major issue. Here it is, see the sales growth in March 220 was 0, then it has increased to 8. So on a lower base, it has increased to 55, which is a positive sign currently. But still, in spite of the good earnings, the stock has fallen badly. Okay. The tax performance, you can see here, the tax rate is reducing from 24%. It has come down to 14%. That is being highlighted as a negative point. The earnings per share has increased. This, okay, from a lower earnings, it has started moving positively. And that is also one of the reasons the PE will reduce. PE gets affected if the earning is also getting affected. See here, the PE ratio, you'll come to know. The PE was very high over here, which was drastically not proportional to the sales level. You can see that the price was going upwards and the earnings per share was much, much lower. Now that the PE has come down, which has become a reasonable PE of 20 and the EPS is 30, you can see the bars are moving up. So it gives an indication that the company is fairly, from the point of view of valuation, it is fairly placed. Okay. One positive reason is another, the debts have been reduced. So they must be taking the reserves and reducing the debts. Okay. So company fundamentally is doing much better, but on the technical charts, the company is seeing a negative movement currently. Okay. On the day chart, it is come down very drastically. So maybe this can become your demand zone, as I told you, and it can start moving up little later. At these levels, once again, it has come down to the same levels, which was about a month back. Any other company?
Thank you so much.
You're welcome. Now let us start with the second part of the session, where I'm going to do some concept on moats and competitive circle of competence. Okay. So I'll stop the session and I'll restart it so that my recording is done in 2 different sessions. Okay. I'll start in 2 minutes time.